Welcome back to another day in the trenches where traders are fighting for their lives. And in all seriousness, we're going to break down some charts, go over some trade ideas, maybe share a couple concepts that you might not be too familiar with. So without any further ado, we're just going to hop over to TradingView. Once again, keep it simple. We're going to look at a few different markets. Namely, we're going to be focusing on the daily chart. And this chart is upside down. Wow, what a mess, right? So what do we have here going for us? And what can we really lean into in terms of developing a trade idea that's going to support, our bias? Well, this morning, I'll kind of give you some context. We were looking at a trade that had not yet broken prior day low. So let me go ahead and annotate that for you. You see this is a prior day low. We'll hop over to the 15, kind of do our little process. The open is right here. So I know a lot of traders, they kind of underestimate the importance of session tendencies. So what do we see here? We have midnight open. I'm going to again share a couple opening price levels with you. So you have the opening price there, opening price there. I had noted to my group this morning over in the DTA cord. I'll leave a link for that below. But what I did was I basically pointed out the idea of London expansion, New York reversal. Now that flies in the face of people who are destined to see prior day low traded to. Well, and eventually they ended up being right. But however, for the context of what we were looking for at the open, a London expansion, New York reversal is a very, very, very common tendency. Now, you might be asking, how do I know that this is a London expansion? I'm glad you asked. We look from midnight New York, midnight opening price, and we see a directional move, a strong directional move. Like if we really get into the weeds on this, this is a really strong trend. Really, 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 really strong trend. A lot of bottoming wicks, just obliterated, no bid. It also had left a pretty solid clue for us right here. If we go ahead and look, we can see these are what you call relatively equal highs. Now, this right here, you might as well go in here. Let's see where are we at. Is there any sort of like magnet? Because this is ultimately a massive, massive draw on liquidity. Let's see if we can put the biggest magnet we can right here. That's what we're looking at. This, I don't even know, can you rotate this? Dang, okay, you can. So that's really the effect we were dealing with. We saw a rapid repricing higher. Now, was NQ necessarily the best market to trade for this? I don't necessarily think so. I think there might have been a better trade. What I like to look for, and I'll give you just a little bit of the recipe, the formula, if you will. I like to combine three elements with a trade. So right here, we can see this is prior day low. We did not test prior day low. That alone makes it really hard for me to want to get in this trade because who's to say it doesn't wick? Who's to say it doesn't hit it? It was very close, and that honestly hurt a lot of traders. I can tell you for sure. When you see a big wick like this, we're talking, I know it looks a little silly at the moment, but we're talking 40, 50 points on wicks. What? That's bigger than some people's targets. So with that being said, we had this initial kind of dip lower. NQ is not the market I was interested in. If I look up to my right, I can see two other markets. I can see ES and I can see YM. Now, was there anything in these other markets that satisfied the move that I was potentially considering? Well, to keep it short, yes. I had saw in YM, hop over there. Pretty interesting stuff. So coming into the open, obviously YM on the daily chart compared to micro NQ, the daily chart is a lot stronger on YM. This is brutal. You see this right here? This is one giant SMT. Just something in this range is down. It's folded. When you look at YM, right here, you can see that there's a higher low forming. So with that being said, again, it is a stronger asset. Does that mean it's going to, go up and everything else sells off? Not necessarily, but what we had seen was there's an SMT on the daily, but with the prior day low, we also were sweeping that on YM. So there was more structure behind trading the YM idea. And you can see the move is a substantially larger move on YM. That's the idea of relative strength. That's the cherry on top that a lot of people miss out on. Just because you have a directional bias doesn't mean you need to trade that specific asset. You can use that same thesis on a correlated asset. So with that, we have, again, these relatively equal highs. Go ahead, zoom in. You see relatively equal highs. They were much cleaner on NQ, I will agree. However, YM gave you a much easier trade. So what would you prefer, an easier draw on liquidity or an easier trade logic? I'm gonna go ahead and choose the logic. So what I looked at, I saw we had swept prior day low, just to kind of keep things in unison. Prior day low right here, right? We stab into these series of down candles, we flip it, we hold here. Now if you go ahead and take a measurement of these down candles, we go from body to body, and we go ahead and open this up at 50%. We're gonna go ahead and look at where the magic happens. What is this right here? 50% of the body to body. Perfect. Literally, like, look, that's on the money to me, you know? I don't enter there. I don't need to enter there. I don't enter at this first fair value gap. People think, oh, this is the gap you need to enter on. If you're watching on the 5-minute, and if you actually go back and check out the stream that I posted, it's a live recording from today's session in the DTA cord. We're doing a thing where we're streaming every day this month. So go ahead, check it out. You can probably get a free week if you go check it out. Honestly, you probably get in for a week and see how we do this live. So this move right here, easy trade to avoid. There's a lot of reasons as to why. Go watch that video if you want to see the details. But with this, we're taking the long here in this little area. Go ahead and show you what we're looking at over on the 30-second, because that's actually where I was able to find the imbalance for my entry. So we see it dips down. We have that change in state, right? Those opposite candles that tag the level, it flips that. That's our change in state. We then form a higher low. Okay, that's maybe our second confirmation. And from there, we're able to form an additional higher low. However, this is where we structure our entry based on this. We're structuring our entry here. Now, I don't know about you, but these targets are abundantly clear. We have a swing high right here, and you have a swing high right here, as well as those levels that we mentioned from above, right? All this. Any level, like, here's the thing. I've said this a million times. Whenever you get this, it's really easy for the market to want to run that, because anyone who's shorting all night, right, this is the point where it flips. Even if it wants to resume lower later, that's the point where it flips. So you got to get, basically, it's just cleaning up some of these lazy trails. Believe it or not, markets are going to hunt for the weak positions. It's not complicated. Whoever's running this stuff, whether it's hedge funds or whatever, they need people to lose, or they need people to get out of profitable trades. So if markets can reprice higher just to stop people out and then continue the downtrend, wouldn't that make sense for them to do? If there was some way to bid this, stop this out. So with that being said, we can focus on finding entries here to target up here. That's pretty much the framework that I like. London expansion, New York reversal. This works either way. You can be long or short. Just use the context. Use the idea of mean reversion. What goes up must come down. The bouncy ball, right? A million different ways you can frame it. But these are the opportunities that I really like, because these moves tend to be aggressive and they provide substantial risk reward. So with this trade right here, if you want to break down the actual risk reward on it, you're going to enter, let's just say anywhere in the gap. You could just put your stop literally right here. So I did this on stream, 2.4R. It's really not that bad. My initial target was right here, but I didn't really get the size I needed. I didn't really realize how small these contracts tick value are. So it's not really worth my time. I'll just take the baby profit. However, if I was sized with, I'd say maybe 5 times the amount of contracts that I had, I would have been a little more enthusiastic about it, and I would have held for this swing. This swing right here is a very, very obvious move to me. I don't need any of the extra. You hit this right here, 109 points with like 5 contracts. You're talking this was $50. Yeah, that'd be a better trade. So was able to catch a piece of that. But you see, look, how else could you have managed this? You could have easily, you get in this position, right? You take partial here, and then you could prior bar low trail, like probably up to here. If you waited for like this push, you could have probably done here and then kind of kept it in. So realistically, you could probably get 753, and 753 correlates with that swing high. So you can also just exit on the strength, just selling into this area. Anything in here is fine. Maybe look for a re-entry in here, Maybe you see something at this level, you buy that pivot, get in, and then you trail, right? So you can always re-enter a trade. You don't need to leave risk on the table, especially if you're doing anything like me, trading these prop firm accounts. You want to be profit maxing. You want to be keeping your money. You don't necessarily get any brownie points for keeping profit or risk on the table. Remove the risk. Get out of the trade. Get out of the risk. You don't need to keep the risk on. So hope you enjoyed today's breakdown. Just gave you some ideas. Went over exactly why I looked for YM over NQ. I gave you a step-by-step process on how to build a high probability model, just using some of the data that we have here. These are the same types of signatures that I look for in everyday price action. So if you enjoy this type of content, be sure to like, share, subscribe, and I will see you next time. Take care.